In today's video, we're catching up with Judd. He's a financial planner and currently he's helping me with a property purchase for a client to buy through their self-managed super fund. So in today's video, we're going to sit down with Judd and we're going to learn about some of the challenges people go through when buying a property through the self-managed super fund. And we also want to just understand, what is a self-managed super fund? How does it work? And is it potentially something that you could do personally for you moving forward? So before I jump into it, we're going to get Judd online. Can you tell us a little bit about your business and what you've been doing?
Yeah, for sure. Thanks for having me, Nathan. Pleasure to join the channel and the video. Thanks for having us on. Look, I work at Secured Wealth in Neutral Bay, so financial planning company, and really specialize in this self-managed super fund space with helping clients purchase property and utilizing their retirement savings to get their money working for them.
Nice quick intro. So Judd's an absolute weapon. He's the guy in the middle, and essentially he's working with the mortgage broker, the accountant, and he's the financial planner, but he's putting it all together for clients. So he's really your go-to person when you're thinking about getting into the self-managed super fund space. He can answer all your questions. So that's why I got him on today. I guess really to jump into it, I want to ask, what are the key rules and requirements for purchasing through a self-managed super fund?
Yeah, look, great question, mate. One of the first ones would be the borrowing arrangements. So you've got to have a limited recourse borrowing arrangement, which means that you've got to set up a couple of different structures to get everything in order. So you've got to have an SMSF trust, you've got to have a bear trust, and as part of that bear trust, that's where you can get a loan against the property, and then that can really get you in the door to purchase a property. So yeah, that's the big one, learning the rules around that.
Yeah, that makes a lot of sense, because I think a lot of people always come to me and they are sort of thinking, what's the difference between, you've got your super fund where your money goes into now and it's, separate, you don't have any control over it. And then you mentioned now you're going into a self-managed super fund. So essentially, are you, with that bear trust, you're sort of now creating a whole new entity and then you're bringing it into that structure?
Yeah, so that bear trust survives until that loan is repaid. And, that you've got to have a really good conveyancer to make sure that the contracts and everything are written properly using that bear trust. So that is the owner of the property. So that's one of the big starting points when you're thinking about a self-managed super fund, that journey. Cash flow, making sure that everything stacks up at the start is really important. So that's what we do with clients. Say, look, what are your employer contributions? What are the expenses that you're going to be running through a self-managed super fund? Coordinating that with a broker to see, okay, what's the maximum borrowing capacity? And generally there's, tight servicing requirements there. And then we work backwards, make sure that there's enough money on the side. The self-managed super fund's going to be surviving by itself in terms of cash flow.
Yep. No, that's a really good way to explain it, because, right now I want to go buy an investment property. I go straight to the mortgage broker. He gives me the loan. I sit there and I do all my cash flow and work out if it's going to work myself. But once you get into the self-managed super fund space, there's that person in between you and the broker, and that's yourself. And then do you go through and analyze, and obviously, so you sign off on, hey, look, this can be done.
Suitable.
Yep.
Yeah. So, look, we do strategy meetings where we play around with different parameters. So, working with a buyer's agent like yourself, Nathan, to see what are the right locations for that budget. When we find out, look, this is the loan serviceability, and then my role is really a project manager, making sure that everything's ticking along. The clients aren't getting overwhelmed, because it is a very compliance heavy sort of area for people, and the ATO have a lot of scrutiny on people and what they're doing. So just making sure everything's above board and everything's done in a timely fashion.
Yeah, and that's when it really, really pays to have someone like yourself. Like, you're right in every situation. And with my experience with past self-managed super funds purchases, which I had a lot last year, it seems to be very common now. The financial planner came in and set everything up, but then took a step back, and it did create a bit of mayhem, because the client's like, hey, look, now I need to get these funds. certified by the ATO, and then, actually
Yep.
coordinate it. So, people that are looking to buy a self-managed super fund, I reckon that really like puts the emphasis on having a really good project manager like yourself in there, because
Yeah. Yeah.
I
Yeah.
had
There's
ones where
definitely
it
a
dragged
preference.
out for ages. Long story short, like a purchase dragged out for about 2 months for one of them because there wasn't a good project manager in there.
Yeah, look, it's really important to have clear communication, working with a good accountant that can get everything set up in a timely manner, update the ATO with the super fund details, and then knowing the super fund that they're with, the client, to get that money released and transferred across. And then that's when you start to, get that unconditional pre-approval when the money's sitting there.
Perfect. Well, I think that sort of answers the question for someone like trying to enter into the space. They're like, hey, look, I want to now buy a self-managed super fund property. I need to go to speak to a financial planner so he can create a process or a plan for me.
Yeah.
And yeah, we're sort of leaning in towards having a really good project manager or financial planner. Now we know, how to get into the self-managed super fund space. I guess, like, what are the biggest advantages and also what are the biggest risks when it comes to buying, especially
Yeah.
property through your self-managed super
Yeah.
fund?
Well, the biggest benefit, if you can partner yourself with a really good buyer's agent like yourself, it makes a world of difference. So it's all about location, getting the right property, not overpaying, having that growth, using leverage. I think that would be one of the big benefits. You're in a tax effective environment. You're not going to be paying capital gains tax in most cases if you're holding that property until retirement. A lot of people, if they're investing in property personally, they're generally capped out with their loan serviceability. A lot of clients have got families, they've got a big mortgage, and they couldn't afford to negatively gear where interest rates are at the moment. So a self-managed super fund unlocks some higher borrowing capacity with your employer contributions going through. It makes it feasible. And it's just a really good tax effective environment. So that would be the main advantage. The drawbacks would be just understanding your responsibilities as a trustee. So it is a big shift from just being a regular member of a retail fund. So you just got to understand those obligations. So if you're going overseas for more than 2 years, you got to have an enduring power of attorney, get a friend or a family member signing off and doing your financials. That's a little bit complex, but that's one way to get around that. Another pitfall would just be to have a really good accountant and making sure that you're staying compliant each year. You're getting all of your documents across to them and getting everything submitted. Because obviously, if you're not compliant, that can cause employer contributions to be rejected. Your insurances don't get paid, et cetera, et cetera. So not taking money from the super fund as well. I've had some clients that have had some, probably legal issues in the past and have dipped into it and got themselves into trouble. So yeah, look, don't use any of that money for yourself. And if you are in the early stages, having maybe before that money's really there, or if there's any issues with using that self-managed super fund money and you are paying for it yourself, you've got to reimburse yourself ASAP.
That is a very good thing to bring up, like that last part. It's kind of like when people go through and they have a bunch of equity in their property and they're like, hey, look, I will go and, or they leverage maybe 20% and they put the rest in the offset account. And, they didn't want to use the big deposit, but now they have access to the money. It's really, that's the downfall. If you're not a, quite a strict person with your money, you do see a bank account there, right? Which you can go and actually just go, hey, I want to transfer 20 grand out, 10 grand. So it's going to take a bit of discipline to be like, no, don't
No, no,
touch that money.
don't do it. The penalties are so severe. Like it's,
Yeah.
your assets turn into income and you're taxed at the top marginal rate. So that'll wipe you out in your investment
Yeah.
strategy. So making sure that, that's quarantine, isolated, whatever's going on in that self-managed super fund.
And in that compliant side of things, is there accountants that really just sort of specialize in that space, and they provide? Do they provide? Is there like a monthly cost, a yearly cost for them to make sure your books are
Yeah.
compliant?
Yeah, there is. So you've got to pay for your financials each year, and you've also got to pay for auditing. And then there's an ATO and ASIC levy as well. Generally, all of those running expenses should float between, if you're not using a off-the-shelf sort of do-it-yourself sort of like eSuper or something, and you're using an accounting practice that you can call up and get a good service from, it's probably ranging between 3 and 4,500 per year. So you've just got to make sure that it stacks up. You've got enough employee contributions, rental income to service that, the loan, some insurance, life cover premiums as well.
Oh, okay, no, that makes sense, and that's why doing your homework up front is really going to pay off. You need to know, hey, look, like maybe you can borrow $1 million, but hey, with all these extra costs and the rent, we might be better off just only spending 600 or 700K. So then we can have the rent actually pay off majority of it. Even if it negatively gears slightly, that's okay because it's in that self-managed super fund world, which there's so many tax benefits to it, which we probably wouldn't be able to get into in this video. But I guess one last risk, I'd say, you did mention if you go and do all of this and then you're like, hey, look, now I've got the money to go buy something through my self-managed super fund, and then you go and actually overpay on a property, or you just pay too much for an asset. That's probably the biggest risk I see in the situation. And I see that happen even now in the Brisbane market. I'm seeing people overpay on properties left, right, and center. Like, yes, it's a hot market, but when it all starts to cool down, it's such a big liability you're going to carry if you're overpaid on it by 50 or 100K. Property's forgiving, but I
think if you can get a 4 or 5% return on a $800,000 property or a $700,000 property, you should be doing pretty well compared to maybe keeping 200,000 in a retail fund earning 8-10% per year. So yeah, look, you really are banking on that capital uplift over time, and you look at those running costs and fees of the self-managed super fund, I'd say, in proportion to what is your assets under management in that structure.
So it's crazy. Like the last property I purchased for 680 only 6 months ago out in Ipswich, it's now worth about 750, and that's only been 6 months. And I think they put in about 200K. So like they are already looking at about a 30 or 40% uplift in their cash. If you left that in a super fund, maybe if it's maybe getting 10 or 20%, that's still like 3 or 4 years down the track. Because of the magic of leveraging, you're essentially going to be able to double your money a lot faster in the property space. How much money does it cost, or how much does someone realistically need before they can even consider purchasing a property in their self-managed super fund?
Yeah, look, it's different for different people. Look, the client that we're working with at the moment, they're probably in a healthier balance. But I would say anywhere between 200 plus. But if you're probably at the lower end of that 200,000, you'd probably need a good income to support that with employer contributions to make sure it is working for you. Because there would be some negative gearing, you'd imagine, on using majority of your super as that deposit.
That makes a lot of sense, because once you go
so
into
you're going all for those clients, you're going all in.
Yep, exactly. And the interest rates are higher too.
They are. Hopefully a little bit of relief after yesterday with interest rates coming down a quarter.
That's some good news.
It's needed.
I guess, could you walk us through a real life example of somebody successfully purchasing through a self-managed super fund and what lessons can be learned from their experience?
Yeah, look, it's a wide range of people, but look, whether you're an owner-occupier and you're looking for your own commercial premise, there's been some builders that I've helped secure their own premise, which was a goal. And, one of them had set up a unit trust and did all of this accounting, but really didn't have that deposit of 30% in that structure. So what I was able to do was, use some unused concessional contributions from previous years, contribute 100,000 between him and the wife. They already had 200 300,000 in their balance, and they were able to buy a $1.4 million property a couple of years ago, which now has done really well. So that was a good one. And they've got 2 lots on that. And if you've got 2 lots, make sure that you've got 2 bear trusts. So with bear trusts, you've got to have 1 bear trust per property. So that's really important as well. Another really good trick for, let's say, someone that's struggling to get into the property market. They might be renting and they want that primary residence in retirement. The age pension's very skewed towards home ownership to get that age pension. So you can actually do an in-specie transfer to yourself in retirement if the property is paid off.
Okay.
So that's a way for clients to get into the property market that they may have otherwise thought that they couldn't achieve.
So what you're saying is that if they brought it in a self-managed super fund today, in the future, when it comes retirement, they can actually turn that into a home they can live into or move into.
Correct. Yeah,
Okay.
as long as it's paid off and it's
Yep.
an in-specie payment to themselves, and then you'd be looking at stamp duty. But still better than nothing, right?
Oh, I think if it's going to get you into the market, especially maybe people that might be at the back end, 40 or 50, they've got a little bit in their super, but they haven't got any personal savings, and they're like, hey, look, I want to lock a property in. This could be an option, really a good solid option for them because they've got some savings in their self-managed super fund. I guess really to nearly wrap things up, I know you sort of answered this question before about the risks with buying in a property, but I guess is there like a few common mistakes you see people do within the self-managed super space?
Just contracts, like making sure, if you've got, using an example of a client, they've got H&S surname super fund, and there's spaces between the first letters. Now, if you've got a conveyancer that doesn't put those spaces on the bare trust, you can run into some issues down the track when you go to sell. Worst case scenario, you have to pay stamp duty again. So there can be some costly errors. So make sure you're dealing with a conveyancer that's got experience in the space. And that would be another one. Would just be staying on top of the housekeeping. So making sure that you're sending those documents to the accountant. If for whatever reason you change accountants, and people do, make sure that you don't go non-compliant through that process. And then that's it. Like, keep money on hand. Don't put all of it into that deposit, so that's your safety net. If you're not able to work for whatever reason, you've got money that can service that loan for a period of time, and then look at other contingencies. So yeah.
No, those are some really good tips, and I know that that conveyancing one is so important. Before we even put an offer in, I get the trust deed, I get all those documents, and I just send it to the lawyers now, and just say, give me the name. And I think for anybody out there, that's their best way of doing it, because if they write the name incorrectly on the contract, which could be very easy to do, it ends up putting them up for double stamp duties, and it's just horrible. Then
Common.
you get through and they can't get the finance because the name's not correct. So just making sure, essentially what you've been talking along this way is like making sure you have a good team in place can really reduce a lot of those risks. Well, thank you so much for jumping on. I guess, could you maybe share how people could find you? I'll make sure to put it in the video as well.
Yeah, just reach out to myself. My email is judd@securedwealth.com.au. Yeah, look, happy to answer any SMSF related financial planning questions.
Thanks for that, Judd.
Thank you very much.
I'll put your details in the video so people can just grab your email and reach out if they have any questions about buying in their self-managed super fund. I personally just purchased, not myself, I helped a client purchase a property, and Judd was incredible. So if you don't see the message up there, just come through my website. I can do the email introduction into Judd. He's a great financial planner, and he can help you with all of that sort of stuff. So
likewise, thank you so much for helping the client.
Thanks, mate.
Awesome outcome.